everyone, this is George Beiruthi from FS Securities, a stockbroking firm on the Gold Coast in Queensland, Australia. And every Monday morning I show you what happened over the last few weeks, and from that information what we forecast may happen the next few weeks. So this is actually to show you what is hot and what is not, and if you like the presentation, please give us some feedback. We would appreciate that very much. Okay, well, look at what happened in America. The first thing we see here is that despite the drop in the market on Saturday morning, over last week the market was up 0.7% or 189 points. When you combine the two last weeks together, we find that the results were even better. 2.5% rise, 688 points rise for the Dow Jones. And the Nasdaq also for the last 2 weeks had 5% rise, and that was made up by 1.7% last week, and the rest of course the week before. The S&P 500 was up 3% over the last 2 weeks. The US dollar over the last 2 weeks combined was almost steady, down 0.2%, and obviously straight away you can see that the Australian dollar versus the US was up slightly by 0.3%. In terms of commodities, gold over the last 2 weeks was up nearly $83 US per ounce, made up slightly by what happened last week, but most of it the week before, because of the spat between Iran and the United States. So over the last 2 weeks, gold was up by 5.6%. Silver had also a very good week last week, slightly rise, but over the last 2 weeks, 6.7%. West Texas crude oil was down 1.1% over the last 2 weeks, and that was major drop last week, but obviously the week before, because of the Iran to spat and its effect on the price of oil. Over the last 2 weeks the market was down 1.1%, major recovery of course. And if you look at soybeans, again the Chinese look like buying American soybeans. The market was up by 4.3% over the last 2 weeks. And by the way, if you're interested to trade any of these commodities, we trade them via CFDs, commodities for difference. All you have to do is talk to us. Okay, now in terms of our market, you can see lots of blue cells here. The only one that we've seen that gold dropped last week, as I explained before. Over the last 2 weeks, however, the gold sector was up by 10.7%. I don't believe the gold sector will continue to rise, and I can see a small decline this week because of what really happened. Of course, we can see that the downing of the Ukrainian aircraft may have had some effect on it, but I think that will probably calm down a few things, as Iran has not threatened the American any further, and America has also decided not to retaliate any further against Iran. So our market is made up to a greater extent by two major sectors, the financial and the materials. When both of these sectors are up, the market responds accordingly. And you can see here the financials were up 1.5% over the last 2 weeks, made up mainly by last week's rise after the calming down, and the materials continues to go higher thanks to the price of iron ore, and 2.4% rise. So you can see here that our gauge, made up by the ASX 200 index, was up by nearly 3% over the last 2 weeks. However, when you consider what happened last week, 2.9%, last 2 weeks ago, of course, the market was down because of the threat about what the spat between Iran and America may lead to with the price of oil, gold, and so on. So the market recovered quite substantially last week. However, because of what we expect the market this week will probably start to go down, we might see probably a retracement back. Other sectors, as you can see here, the best sector here in terms of rise, telecommunication was actually very good last week, 6% rise. The information technology, 3.7%, and consumer discretionary and energy were both up. In terms of the stocks, you can see here most of the stocks were actually higher last week. You're looking down this column here, we can see that Telstra was up by 7.2%. Wesfarmers, nearly 5% rise. Woolworths, 4% rise. The declines, AMP was down 2% last week and further drop 2 weeks ago. Also CIMIC, the old Leighton Holdings, down 1.7% last week, and the week before was even worse. Combining the 2 weeks together was have nearly 5% drop in CIMIC, which is the old Leighton Holdings. National Australia Bank was also down by 0.9% over the last 2 weeks. Okay, so we can see the good ones and the bad ones. The banks, I like to have a focus on the banks. ANZ was up 1.6% last week. CBA had a good week last week. NAB had a good week last week. However, the week before was actually bad. And Suncorp, good week last week. And Westpac, up again last week. Okay, in terms of the volume, we believe the volume has an important factor. You can see that the volume has still been lower, relatively speaking, to what happened before Christmas. The market has dropped because of the holidays, as you can see here, very low volume, and then started to climb, and then still below the 2 billion transactions per day, which still indicate low volume. So it could be for two reasons. Either people are still on holidays, or mainly because people are actually sitting on the sidelines waiting for further reaction from the overseas market. Advances or declines, last 2 days, Friday and Thursday, you can see despite the low volume, the advances exceeded the decline quite substantially. Looking week by week, we've had 2 good weeks where the advances were higher than the declines. So the market was actually starting to recover after the drop 3 weeks ago, before Christmas. Now looking at our mechanical system, based on various technical indicators, we look at the American market, we can see that the American market has been very strong over the last 3 weeks. And of course, on Saturday morning, we did that particular analysis, and we found that the market in America continues to be strong, and we don't have any reason why the market will continue to follow up that particular trend. So we can see that we expect the market will still be strong. And by the way, on the 15th of this month, which is only a few days away, America and China are expected to sign the first phase of the trade deal, which may actually bring some positive momentum to the market. Gold, very good week 2 weeks ago, and we can see on Saturday the indicators are saying that there is a bit of weakness. The investor is still very strong, but remember, the investor is based on indicators that take a long time to materialize because it's based on monthly and weekly, while the very aggressive trader is based on daily trends and indicators, and still continues to be strong. The crude oil So now we've gone into bearish area, and it could possibly indicate that we can actually trade on the downside Santos and Woodside Petroleum and other oil stocks. The Australian dollar had a bearish week last week, and you can see that we've turned from bullish to two bullish transactions here for the aggressive trader and the very aggressive trader. That's 2 weeks ago, and on Saturday morning the market is telling us we are on a bearish, slightly bearish momentum for the very aggressive trader. But if you are a long-term investor, you actually sit on the sideline because it's neutral. Okay, looking at the charts, the American market here, even though on Friday the market dropped, that's the weekly and that's the daily. As you can see here, the daily on Friday dropped. The market continues to be in a very strong momentum. Stochastic, strong momentum, positive. Parabolic stop and reverse, strong momentum, positive. And the crossover between the 9 and the 21 week, again positive. So the indicators for the weekly show very strong momentum. Now if you combine the weekly and the daily, because that's how our mechanical system works, you need to have positive momentum here and then give the right to trade provided the indicators on the daily continues to be in coherence with the weekly. Well, the parabolic stop and reverse still positive. The stochastic slightly positive. It had a major drop, but then it recovered. And the 9-day over the 21-day, that's still positive. We have a red candle, but we still can see that the market may drop today, but then we're still in a positive momentum. Now if you look at our indicators for our sectors, you can see for the very aggressive trader it's all bullish. The financial gone from bearish to bullish, that's at the end of the week last week, but that's only for the very aggressive trader. Materials is the one that we should really focus on. We're very strong in terms of the commodities, especially commodity like iron ore price, which continues to be high. Telecommunication, again, it shows very strong bullish. Could that be because Telstra is likely to show the dividends in a few weeks time? And of course, if you are a Telstra owner of the shares, you want to hold on so you can get the dividends, and maybe you want to sell after the dividends X date. Okay, now look at the chart, the weekly chart. We had a very good week last week after a drop the week before. So really we actually reached an all-time high. You can see here, this is actually the closing price, all-time high. We might see a reversal this today, Monday, but still we are very strong. We had 1, 2, 3, 4, 5, 6 green candles out of 7. A retracement back, very possible this week, especially in the beginning of the week. Look at our mechanical system. Again, on Saturday we can see that most of our stocks are strong with the exception of CIMIC, and NAB continues to be a bit doubtful, but the very strong one, BHP, CBA, Macquarie Bank, QBE, Rio and Santos. Today will be a reversal of the market because the futures are showing a drop of 52 points at the start of trading. That may even show you an opportunity to add on to your stocks or buy new stocks with new trades. Telstra went from bearish to bullish, but TPG turned from bearish to very strong bullish, so that may also have an effect on the market. That may be also because of the ACCC decision, perhaps supporting the merger between Vodafone and TPG. Alright, well, let's see what happens beyond this week in terms of The stocks we have here, we use a mechanical system here to show the various companies that had exceptional volume. This is actually a system that we use when the price of a particular stock goes up and volume goes up in relation to the average volume. We have a signal that Santos, for instance, the price of Santos last week went up by 5.6% and the volume was up by 122% above its volume average. So you can see here the average, weekly average is 24 million transactions, and last week we've seen nearly 30 million. So exceptional volume and increase in the price. Woodside Petroleum again went up by 3.1% with 112% above its average volume. Now if you look at the mid cap, Karoon, the volume was nearly 477% and the price went up by nearly 20%. Again in volume, that's our main focus. A company called MyState, or a copper, which is actually a rare earth and lithium company, had a very good volume, 21% rise and 234% rise in the volume. So if you want a copy of this slide and you want to talk to us, all you have to do is talk to us. Now finally, before we close, just to let you know what happened on Friday. Over the last full week and from around the globe, the Dow was actually up 0.7%. That's the weekly. Went up by 189 points, and over the last 2 weeks had nearly 688 points, as I've explained before. Now, in terms of our CFDs, these are what we've traded recently, and you can see here. Sorry, that's the wrong one. I want to show you this one here. This is what we traded of recent time, and you can see we had a very good week last week with all the trades with a reasonable profit on that side. That shows all the trade from the 3rd of January till the 10th of January. That's on Friday. What we've opened, what we've closed. We've done some bit of profit on Nanosonics. We made some reasonable profit on Karoon. Mind you, Karoon was actually in a major loss for a while, but now we recovered last week. We traded the Australian 200, that's the XJO, and we opened and we closed and we made some decent profit as well, as you can see here. We made small profit on the British pound versus the US dollars. Okay, so to finish off our disclaimer, everything we presented here today was actually only for general advice only. Nothing we say here is for personal advice, and before you take any action, please talk to us or to your professional advisor. There is no guarantee that anything we said today is going to turn good, so of course there is risk in the market and you need to be very cautious of that. If you have any questions, all you have to do is ask, and to call us, you ring 61 if you're ringing from overseas, and our mobile number 411-259526. Again, 61 if you're ringing from overseas, and if you want to write to me, george@fssecurities.com.au. Happy trading, and again, hopefully you make some money on the stock market today and this week as well.